with more and more news coming out that the interest rate will be increased in 2022. Probably now is the time for us to rethink about investing in the bank stocks, which might be benefit from the increase of interest rate. And today, we will look at one of the big five banks in Canada, CIBC. Hello and welcome to my channel. I plan to record my journey towards FIRE, financial independence, and retire early in this channel. Currently, I mainly focus on sharing my Canadian dividend stock investment journey and those stocks in my portfolio. This is the way that let money works for you and generate more money. In the future, I will also add contents introducing products that saves you money. So if you are interested in these topics, hit the like button to let me know. Subscribe to my channel and turn on the notification to get the latest update. And now, let's get started. The financial sector is one sector that is very sensitive to the changes in interest rate. And when the interest rate increased, entities like banks, insurance companies, brokerage firms, and money managers generally benefit from higher interest rate. One simplified way to understand this is that one way that banks gain profit is by lending money to others and then receive the interest. And with interest rate increased, normal people like you and me may tend to put our money into the savings account so that we can gain some interest from the money that's been put into the bank account. And that also means the bank will have more money to lend to others. And when they lend those monies to others, they are charging at a much higher interest rate. And with the interest rate increase, the gap between the interest rate we received from the bank and the bank charged from the borrowers will be increased, and that will result in the bank to gain more profits, so that they will perform better when the interest rate increases. And with the interest rate that is almost certain to increase in 2022, seems it's not a bad idea for us to get involved in the Canadian bank stocks. And today, we are looking at CIBC, one of the big five banks in Canada, and it has also performed really well in the past year. If we look at its one-year stock price change, we can see in the past 1 year, the stock price of CIBC has increased over 40%, which is very impressive. It also gives you a pretty nice dividend yield at over 4%. CIBC has 4 strategic business units called Canadian Personal and Business Banking, Canadian Commercial Banking and Wealth Management, U.S. Commercial Banking and Wealth Management, as well as capital markets. It is also internationally operated in the United States, the Caribbean, Asia, and United Kingdom. CIBC actually globally services more than 11 million clients, and it also ranks at number 172 on the Forbes Global 2000 listing. CIBC aims to deliver superior client experience and top-tier shareholder returns while maintaining their financial strength. To achieve their vision, they are executing 3 strategic priorities. The first is elevating the client experience in an increasing digital world. And they actually did a pretty good job at this, as their mobile app has ranked the highest in banking mobile app satisfaction in 2021. The second priority is to focus on high-growth, high-touch client segments, and then the third, investing in future differentiators within fast-growing markets. And we can see that they are executing these priorities, as in their 2021 annual report, CIBC is actually in the top 10 in financing for the renewable energy industry across North America. When looking at stocks, we do want to invest in those companies who has a high profitability, and there are several factors we can look at when determining the profitability of a certain company. One factor we can look at is the profit margin. The profit margin shows you how well the company handles expenses. Typically, a higher profit margin means the company is good at handling its expenses and can achieve a higher profit. A general rule of thumb is that we want the profit margin to be higher than 10%. And for the bank sector, the profit margin is always a lot higher than 10%. And we can see here the profit margin of CIBC is 32.38%, which is pretty good. Another value that we want to look at is the return on equity. The return on equity shows you how much profit can be earned for each dollar invested into this company. And for CIBC, this number is 14.79%, meaning that for every $100 invested in CIBC, they will profit $14.79. And just for comparison, the companies in S&P 500 on average have a return on equity of around 14%, meaning that CIBC's return on equity is above the average of the companies in S&P 500. So this is also a pretty good number. And as dividend investors, a really important ratio that we want to look at is the payout ratio. The payout ratio shows you how much money the companies pays out as dividends compared to the total money that they earn. And usually, if the payout ratio is less than 75%, that means the dividend from this stock is sustainable. And a lower payout ratio, meaning that there is a greater potential for the stock to increase its dividend yield, as well as means the company will have more money to invest and keep growing its own business. So generally, a low payout ratio is a good thing to see, especially with a high dividend yield. So for CIBC, the payout ratio is 41.92%, much lower than 75%, which is good. And currently, CIBC pays you a dividend of $6.44 per share per year, meaning that for every one share of CIBC stock that you have, you will receive $6.44 in 1 year, and the dividend is paid out quarterly. And if we look at the dividend history shown on the CIBC's website, we can find they start to declare dividends since 1997, and then they increase their dividends over time from $0.25 per share all the way increase year over year until today when they reached $1.61 dividend per share. Finally, another value that we could look at is the PE ratio. PE ratio shows you how much confidence the investors have in the stock, as well as whether the price is more expensive or not. Generally, for large corporations like CIBC, a PE ratio lower than 20 is a good number. If we look at the 5-year average PE ratio of CIBC, it's around 10.4, and the current PE ratio of CIBC is 11.5, a little higher than the 5-year average. This could mean investors are more confident in CIBC and believe that the value of its stock will keep increasing. And this could also mean the price of the CIBC stock is a little bit more expensive. However, as the PE ratio of CIBC is lower than 20, I would say this value for CIBC is also a good number. And if we compare CIBC's share price versus fair value, we can see that CIBC's current price is far below its fair value. It's almost over 35% undervalued. This shows there is a lot of potential growth for the stock price of CIBC. Currently, in my TFSA account, I hold 12 shares of CIBC with a total value of $1,921.56. My average buying price is 140.45 Canadian dollars, and CIBC takes up around 5.8% of my entire portfolio. So far, my all-time return on CIBC is over 14% up, gaining me over $200. Overall, the financial sector is a pretty strong sector in the Canadian stock market, and CIBC, as one of the big 5 banks in Canada, offers a pretty nice dividend yield, as well as has a lot of growing potential in its stock price. That makes CIBC worth your consideration when buying Canadian bank stocks. So, do you already own CIBC stocks? Or which bank stocks do you prefer to buy? Leave a comment to let me know. Thanks for watching my video. If you enjoyed the content, please hit the like button and subscribe my channel. If you are looking for zero commission fee investing platform, I recommend you Wealthsimple Trade. If you are looking for instant money transfer between friends, then Wealthsimple Cash will be the right platform for you. Need a high interest, no fee saving account? Have a look at EQ Bank. It offers higher interest than any of the big 5 banks and has no banking fee. Additionally, if you are looking for great credit cards, I recommend Brim World Allied Mastercard and Neo Card. I personally use them and enjoy the cashbacks they have to offer. More details about these cards can be found in my channel. And if you use my referral links in the description, you will get referral bonus for having these great products. Thanks again for watching my video, and I'll see you in my next video.